Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Friday, the 7th of August, it is non-farm payrolls Friday today. And markets are looking a little bit risk averse, actually. We've seen the beginnings of a bit of a rolling over on equity markets, at least. Slight paring back of gains through, say, for example, the DAX. But mainly it's interesting that we've seen these Wall Street markets continuing to climb higher. That was the S&P 500 closed last night. Futures off the top slightly today, and that's helping to generate that corrective move on European indexes. Interesting that we've started to see a little bit of a dollar rebound. Is this a lasting rebound? I don't necessarily think it is. I think that it's the key events ahead are still going to define whether this is a rebound for the dollar or not. You've got payrolls today, but also mostly focused, I think, on the fiscal support package that Congress and the President can cobble together. And how and when that is announced will be, I think, important. Can we see the dollar rebounding? Because at the moment, you continue to see yield sliding. That's an issue. You continue to see the yield curve flattening, all these yield spreads falling away. That's a flattening yield curve, and that tends to be dollar negative, and yeah, it's not positive for the greenback. So subsequently, we've still got essentially this dollar weakness coming out a little bit higher today, but needs a sizable rebound, I think, to really gain traction on that recovery. Not yet seen. In terms of other markets, well, we've got the oil price, which is slightly lower today. It's interesting that the breakout above 44.90 on Brent crude didn't finally, or hasn't yet finally closed that gap at 45.20 from the big March breakdown. Still unclosed on that gap, and the market just drifting back. It's key support on Brent crude, 42.90 to 44.90. So $2 of really important support there. So where are we at in terms of data points today? Interesting, because we've had the Chinese trade balance, which has increased quite significantly on the surplus, and that was driven through the surprise increase in export numbers and a slight decrease in imports. So subsequently, a big jump in the trade balance there. So that hasn't really impacted through risk appetite turning positive. Actually, risk appetite has turned negative today. So markets mainly sort of focusing on that US fiscal support package that continues to not be agreed, and also looking ahead to payrolls today. Now, payrolls in focus today. Non-farm payrolls expected to be non-farm payrolls headline 1.6 million jobs. That sounds good compared to 4.8 million last month. Not as good, but is that number going to be seeing a downside surprise? We've seen a lot of components on the ISM data which have suggested that payrolls could struggle to get 1.6 million jobs. Also, the ADP surprised quite big to the downside on Wednesday as well. But yeah, that headline number, 1.6 million jobs at 1:30. Big focus there for markets today. So that takes me on to my chart of the day, which is FTSE 100. Now, FTSE has, well, anyone who's traded FTSE will know that FTSE is an absolute horrific laggard. You've got that Wall Street rally, just less than 2% on the close last night. S&P 500 away from the all-time high. Look at how far FTSE is away from its all-time high. That is the all-time high, 7727. Not even anywhere near. Anywhere near. I mean, 100% fib retracement is up at 7690. 50% fib is where it's struggling at the moment. So it's, again, also rolled over in the last month. Yes, equities have tended to be rolling over European side in the last month. You've got strength of currencies driving that move. But FTSE seems to still be a key laggard amongst all that. And another rollover, left resistance around 6110 as another lower high underneath 6150. I think it was 6155, sorry. And it certainly looks as though momentum indicators rolling over again. Look at those stochastics. MACD lines tailing off, RSI tailing off. So downside pressure seems to be growing. And it has sort of traded between these fib levels, 38.2, 50% for the past, well, coming up 2 months almost. So if it closes below that 38.2% fib, well, you are sort of looking at that testing of the 58.57 reaction low initially, but it really does sort of suggest that the bull failure rolling over and then closing back underneath that fib level really does suggest it's sort of tailing off. Doesn't bode well for the recovery, which, is it a recovery? A recovery of sorts anyway. So yeah, this is not looking all that great on FTSE 100. Let's have a quick look at the hourly chart. Is anything really doing there? Nothing really. Bull failure going on around 50 to 6, around 60, 65 on RSI. MACD line's falling away. Stochastics already falling away. Small head and shoulders top pattern, you could argue. Initial support 59.80 now. If that gets broken, you are probably looking at the lows again, or a retest of that 58.57 low. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.